Let's dive deeper into the action with our markets reporters at the close. Abigail, what are you watching?
Well, Caroline, I'm not thinking so much about that S&P 500 30,000, but I am thinking about Russell 2000 1600. Caroline and you and Scarlett and Joe were just talking about the outperformance for small caps, up 3 days in a row, up more than 1% on the day. On this, we have the Russell 2000 back above its 200-day moving average. This chart originally came to us from Ari Wald of Oppenheimer. That 1600 level, very important to him. What really stands out, the Russell 2000 about at levels seen this time last year during all of that volatility. But again, today, peaking above that 200-day moving average, the rising RSI, bullish momentum suggesting we could just see this Russell 2000 in the near term, perhaps by the end of the fourth quarter or sooner, Taylor, climb again to that 1600 level. Should that happen, it'll be interesting to see whether or not that resistance can be broken through, Taylor.
Well, Abigail, I'm taking a look at the yield curve, and in particular the 3-month 10-year, which is steepening, and it's now positive for a fifth straight session. And as you take a look at the yield curve, you can see how it folds into the banks, because there's some commentary on our MLive blog that says banks' profitability is showing that they can still be profitable in a flat or in an inverted yield curve. And so it doesn't cause a recession because it discourages bank lending, but instead interest rates, rather than the shape of the yield curve, is what really matters to lenders. And then if we flip up the board, we can see, of course, big gains from all the big financials. Morgan Stanley leading the gains up about 1.5% after they were the last of the big bulge banks to report here. You're getting big FIC trading revenue given the MOVE index had jumped from a 50 to a 90 in the third quarter. VIX, the measure of the equity volatility, moving as well, but not as much as the bond markets. And so big banks continuing to do it again. Renita.
Thanks, Taylor. I am taking a look at Barrick Gold, which is the world's second largest creator of the commodity. And it's actually rising today after its recent results came out. Take a look at this intraday, and it showed that after third quarter production for the metal was slightly below levels in the previous period, but they were still on track to meet its guidance for this year. Now, gold output was affected by operational restrictions at Barrick's North Mara mine in Tanzania. In the third quarter, gold cost of sales is expected to be about 11% to 13% higher than the second quarter. And during that time, spot gold prices averaged out at $1,474 to be exact an ounce. That's 22% higher than a year prior. Gold prices have rallied on trade tensions and geopolitical issues, and they're certainly expected to continue to do the same into year 2020.